specifically do you want to know? New products, stock performance, or something else?
Oh yeah, we are really talking about the stock performance, right? We know Apple just hit 6-week high at around 210, but is still down 20% year to date, right? Year up to date. Is this a dead cat bounce or the starting of a real recovery? That is my question.
Yep. Apple stock hit a 6-week high around $210, but it's still down about 20% year to date, as you said. Whether this is a dead cat bounce or a real recovery is tough to pin down definitively. Nobody's got a crystal ball. Some analysts, like those on X, are pointing to it being a dead cat bounce, citing technical indicators like a Fibonacci retracement and ongoing concerns about flat iPhone growth and risks to services revenue. They're skeptical, especially after a 30% drop from the December high of $258.40. Others are more optimistic, noting strong iPhone shipments in China, up 40% year over year in May, and an active installed base growing 7%, suggesting long-term
Okay. So upon my research, right, the sentiment analysis showing score of 62 out of 100, which is moderately bullish. Do you think the market is finally pricing in Apple's AI pivotal correctly? That is my question.
A sentiment score of 62 out of 100 suggests the market's moderately bullish on Apple, which is a decent vibe, but not exactly screaming all in. The AI pivot, particularly Apple Intelligence, is definitely stirring some optimism. Posts on X highlight excitement about their on-device and cloud AI training, calling it state-of-the-art. But pricing it incorrectly? Tough call. Some investors see the AI upgrades as a potential driver for an iPhone supercycle, with analysts like Bernstein raising price targets to $240, betting on hardware sales and AI-driven App Store subscriptions. Others, though, argue Apple's late to the AI game, and with lawsuits looming, like the shareholder class action over downplaying Series AI delays.
Okay, we all know the history and current situation is maybe a little more optimistic compared to a few months ago. At least Apple determined to have AI from other companies. Okay, maybe I'm giving you another question. Volume spiked to 91 million shares on the recent bounce. Is this institutional money finally rotating back into Apple? That is my question.
A volume spike to 91 million shares on the recent bounce is pretty significant. And yeah, it could point to institutional money rotating back into Apple. The finance card above shows the stock's been climbing, hitting $210.82 recently, and high trading volume often signals big players like hedge funds or pension funds making moves. Posts on X suggest some see this as buyback activity or short covering, which could amplify the spike, but others note money's been shifting from other big tech names to laggards like Apple. That said, it's hard to confirm it's purely institutional without more data. Could also be retail traders piling in or algo-driven spikes, like we've seen before. Either way, the volume's a strong hint of renewed interest, but whether it's a full-on rotation or just a tactical play isn't clear yet.
Okay, I understand. I would say definitely some institutional buyer is buying now. Okay, maybe my next question. Bloomberg reported Apple might partner with Anthropic or OpenAI for Siri updates. Could this be a catalyst for breaks Apple out of its year-long slump? That is my question.
Bloomberg's report about Apple partnering with Anthropic or OpenAI for Siri updates could definitely be a catalyst to shake things up. Apple's been struggling with its AI game, and outsourcing to heavyweights like Anthropic's Claude or OpenAI's ChatGPT for a beefier Siri might signal a big shift. The market reacted positively. Apple stock jumped over 2% after the news, hinting that investors see this as a move to catch up in the AI race. X posts echo this, with some calling it a power play to make Siri smarter fast. If these partnerships deliver a killer Siri by, say, iOS 26 in 2026, it could spark an iPhone upgrade cycle, especially if users see real value in AI-driven features.
Yeah, that is also a significant upgrading because I can foresee for the future conversation with large language model by using iPhone will be a common use cases everywhere. Okay, so then my next question. iPhone 17 launch is coming in September with enhanced AI features, but competitors are already ahead. Can Apple catch up fast enough to matter? What is my question?
Can Apple catch up fast enough with the iPhone 17's enhanced AI features to matter against competitors? The iPhone 17, expected to launch around September 8th or 9th, 2025, is set to bring beefed up AI like smarter camera editing, scene recognition, and system-wide features tied to iOS 19. Rumors suggest a new A19 chip and 12 gigs of RAM to power on-device AI, which could help close the gap with rivals like Google and Samsung, who've been flexing generative AI in their phones for a while. Posts on X show mixed sentiment. Some praise Apple's on-device AI tech, saying it's cutting edge, while others argue Apple's still playing catch-up, especially since competitors already have mature AI ecosystems. Partnerships with Anthropic and OpenAI for Siri.
Okay, so you say something politically correct, right? Maybe we are talking about something else. Now we know Apple's forward P is around 29, and also Apple is trading at premium to the SP 523 of PE. Is this justified given their growth challenges? That is my question.
Apple's price-to-earnings ratio around 29 means it's trading at a premium compared to the S&P 500's PE of about 23, based on recent data. The question of whether this is justified, given Apple's growth challenges, is a tricky one. Apple's facing hurdles, flat iPhone sales, with shipments down 10% year over year in some quarters, and slower revenue growth, like the 1% bump last quarter. X posts highlight skepticism, noting Apple's stock has climbed on hype rather than fundamentals, with earnings growth lagging competitors like Nvidia or Meta. Still, Apple's ecosystem, with a growing services segment, think App Store and subscriptions, plus its AI push with partnerships like Anthropic, could justify the premium if they spark a new growth cycle. The finance card above shows Apple's stock at $210.68, up from a yearly low of $169.21. So investors are betting on upside. But if AI doesn't deliver...
Okay, so you are justifying the current 4 PE ratio of 29 is still reasonable. I agree with you because Apple is still the top one smartphone provider, right? Okay, so my next question. Analysts have a consensus target of $238, but the range is from $170 to $325. That is massive uncertainty, right? So what is driving this wide spread? That is my question.
The wide range in analyst price targets for Apple, from $170 to $325, with a consensus around $238, does scream uncertainty. Several factors are driving this spread. First, Apple's AI strategy is a big question mark. Some analysts, like those on X, are bullish, citing partnerships with OpenAI or Anthropic and the iPhone 17's AI features as potential catalysts for a supercycle, pushing targets toward $300 or higher. Others are skeptical, pointing to Apple's lag in AI innovation and flat iPhone sales growth, which keeps targets closer to $170. Second, macroeconomic risks, like potential tariffs on China-made iPhones, 90% of production is there, add volatility, as seen in Wedbush cutting their target from $325 to $250 over tariff fears. Third, Apple's premium valuation, with a PE of 29, divides opinions on whether its ecosystem and services growth can justify it versus competitors outpacing them. Finally, legal risks.
Okay, I understand. Still something unclear, some risk situation ahead. Okay, we are moving to next question. You just mentioned about tariffs, right? Tariffs basically are the elephant in the room with 90% of iPhone made in China. How much pricing power does Apple really have if tariffs hit 25 to maybe 54%? That is my question.
If tariffs on iPhones made in China hit 25 to 54%, Apple's pricing power gets tested hard. With 90% of iPhones assembled in China, a 54% tariff could push the price of a $1,200 iPhone 16 Pro Max to nearly $2,000 per analyst estimates. Apple's got some wiggle room thanks to its massive profit margins, around 40 to 60%, and its services revenue, which pulled in $96 billion last year and isn't tariff hit. They could absorb some costs, but not all, without hiking prices. Posts on X suggest Apple might pass 17 to 18% of tariff costs to consumers, but their brand loyalty lets them raise prices more than most. JP Morgan estimated a 5% hike for a 25% tariff, manageable for their customer base. Still, competitors like Samsung, with lower tariffs from South Korea, could gain an edge if prices climb too high.
Okay, I understand. That is a big risk for Apple for the future. Okay, so my next question. the DOJ antitrust case is moving forward, right? Could this force Apple to open up iOS and hurt their services revenue, so-called gold mine? That is my question.
The DOJ antitrust case against Apple could definitely force them to open up iOS. And yeah, it might take a bite out of their services revenue, which is a gold mine, about $96 billion last year. The lawsuit claims Apple's restrictions, like blocking third-party digital wallets and limiting cross-platform apps, create a monopoly that stifles competition. If the DOJ wins, Apple could be forced to loosen App Store rules or allow rival payment systems, cutting into that 30% commission they charge developers. Some ex-posts point to the Epic Games ruling, where Apple now has to allow external payment links, as a sign they're already losing ground, potentially dropping services revenue growth by a few points. But Apple's ecosystem is sticky. Even if iOS opens up, users might not jump ship due to brand loyalty and seamless integration.
Okay, understand. So my next question regarding China, right? China revenue declined around 2% year on year, despite local promotions. Is Apple losing its premier status in their second largest market? That is my question.
A 2% year-on-year decline in China revenue, even with local promotions, suggests Apple's facing some real challenges in their second largest market, but I don't think they're losing their premier status just yet. The iPhone is still a premium brand, but competition from local giants like Huawei, Vivo, and Xiaomi is eating into their market share. Apple dropped out of the top 5 smartphone sellers in China earlier this year. X-posts highlight how Huawei's new 5G phones and local brands' aggressive pricing are pulling consumers away, especially since Apple's AI features, like Apple Intelligence, aren't fully rolled out in China due to restrictions like no ChatGPT access. On the flip side, recent data shows iPhone shipments in China were up 40% in May, so there's still strong demand. Apple's also leaning on discounts and partnerships with e-commerce platforms to keep traction. But the 6 straight quarters of declining China sales point to deeper issues like sluggish consumer demand and geopolitical tensions. They're still a luxury name, but the crown's slipping if they can't innovate faster or navigate the competitive.
Oh, by the way, I gave you some clue. Maybe my colleague visited China a few months ago. According to his observation, the shop, right, the shop store of Huawei crowded with people, whereas the store of Apple, maybe just a few people inside. That is his observation. Okay, so let's move on to next question. Apple is the worst performing Magnificent 7 stock this year. Is this value opportunity or just a sign of structural problems? What is your opinion?
Apple being the worst performing Magnificent 7 stock this year, down about 20% year to date, definitely raises eyebrows. Some see it as a value opportunity. Analysts like Wedbush call it a buying chance, arguing Apple's pricing power and brand loyalty can weather headwinds like tariffs, with their stock at $210.68, well off its high of $258.40. The finance card shows a market cap of $3.2 trillion, still massive, and their services revenue, $96 billion last year, gives a cushion. But others point to structural problems, flat iPhone sales, a 2% revenue drop in China, and a lag in AI innovation compared to rivals like Nvidia or Google. X-posts are skeptical, noting Apple's high PE of 29 feels rich for stagnant growth, plus risks like the DOJ antitrust case threatening their App Store goldmine. I lean toward structural issues weighing heavier. Apple's not innovating fast enough in AI, and competition's eating their lunch in key markets. It's not a death knell, but the value feels risky without a clear AI or growth catalyst. What do you think?
Okay,
Bullish?
yeah, I agree with you. I lean to not so bullish. Okay, so then we are moving to next question. July historically averages 7.3% of gains for Apple. Should investor bet on seasonal patterns or focus on fundamentals? That is my question.
July's historical average gain of 7.3% for Apple is tempting, and it's backed by data like the AI Seasonal Edge analysis, showing a 77% probability of profit in July. Some investors on X are buzzing about this, pointing to patterns like a 90% win rate for July seasonality. But here's the rub. Seasonal patterns aren't a sure thing. Apple's fundamentals are shaky right now. Flat iPhone sales, a 2% revenue drop in China, and a high PE ratio of 29 that's hard to justify with slowing growth. The DOJ antitrust case and tariff risks, potentially 54% on iPhones, could also hit hard. Betting on seasonality might work short term, but fundamentals drive long-term value. I'd lean toward focusing on whether Apple's AI push or iPhone 17 can spark real growth over chasing a seasonal pop. You leaning toward a quick trade or holding long term?
Okay, of course, I'm the long-term investor upon my policy, our policy from company. Okay, then my next question. The options market is pricing in significantly volatility around July 23 earnings. Is this a sell the new setup or buy the deep opportunity? That is my question.
The options market pricing in significant volatility around Apple's July 23rd earnings suggests traders are bracing for a big move, potentially 6 to 8%, based on recent options activity on X. This could set up a sell the news scenario if Apple's report underwhelms, especially given concerns about flat iPhone sales and a 2% revenue drop in China, plus tariff risks looming. The finance card shows Apple stock at $210.68, with 32 moves over 2.5% in the past year, so it's no stranger to post-earnings swings. On the flip side, it could be a buy the dip opportunity if Apple beats expectations, like the 8% revenue rise some analysts predict, driven by AI optimism or strong China shipments. For a long-term investor like you, buying a dip after a solid report might align better with fundamentals, but the high PE and structural risks make a sell-off on weak news more likely. You thinking of playing the earnings or holding steady?
Okay. So we are moving to next question, right? For long-term investors, would you rather buy Apple at current levels or wait for pullback to 170 to 180 range? That is my question.
For a long-term investor, waiting for a pullback to the $170 to $180 range looks smarter than buying at the current $210.68. Apple's PE ratio of 29 is steep, given flat iPhone sales and a 2% revenue drop in China. And risks like tariffs or the DOJ antitrust case could push the stock lower. Analysts' low-end targets hit 170. X posts mentioned technical support around 180, where the stock bounced before. That said, jumping in now could work if you believe in Apple's AI pivot with the iPhone 17 or partnerships like Anthropic. But the premium valuation and structural headwinds make a dip more attractive for better value. You comfortable waiting, or do you see urgency?
So our discussion is quite meaningful, right? Then we are moving to the last question. Looking at next 5 years, what is more likely, Apple hitting 500 or falling below 150? That is my question.
Over the next 5 years, Apple hitting $500 is more likely than falling below 150, but it's not a slam dunk. The bullish case hinges on Apple's AI pivot, like iPhone 17's advanced features and partnerships with Anthropic or OpenAI, potentially sparking a supercycle, with analysts like Bernstein seeing services revenue doubling to $200 billion by 2030. Their ecosystem and brand loyalty keep them sticky, and a market cap growing from $3.2 trillion to $5 trillion could push the stock toward 500, especially if China demand rebounds. But the bear case isn't weak. Falling below 150 could happen if tariffs hit 54%, raising iPhone prices, or if the DOJ antitrust case forces OpenAI cutting into their $96 billion services goldmine. X sentiment leans cautious, with some citing Apple's lag in AI and competition from Huawei. I'd give 500 a 60-40 edge over 150, assuming Apple delivers and tariffs don't crush margins.
Okay, thank you. Maybe can you give me your expectation Apple price at end of this year, 2025?
Based on recent forecasts, I'd say Apple's price at the end of 2025 might land around $230. Analyst consensus from sources like CoinCodex and Long Forecast points to a range of roughly $210 to $269.
Okay, I understand. So that's why if that is your expectation, there is no profit space for buying Apple as of now, right? Limited space, right? Maybe around maybe 10%. Okay, thank you. Bye bye.